Christian, this was a mixed bag. Year on year was okay. The quarterly number looked bad. Fixed investment in March was disappointing. And industrial production was disappointing. What is your reading on this?
Well, as you say, it is a mixed bag. Clearly, the Chinese economy is slowing, although it may be not as slow as some of the monthly data had projected. The trade data was incredibly weak in the first 3 months of the year. Also, retail sales, industrial production, investment, all of these data had come down significantly. The PMIs, you name it, everything was weak. A 7.4% increase in GDP year on year is, in that sense, actually a positive surprise. And also, if you look at the underlying data, retail sales strength is actually good news, because as China is moving away from investment, retail sales consumption should be the new growth driver, and that seems to have delivered. And that's also good news for the global economy and global demand.
All right, so business as usual here in Europe, no major impact from these numbers.
Well, for Europe, I would say the Chinese data is in line with expectations, so broadly neutral, slightly negative maybe.
Eurozone inflation revision today. Any chance at all of an upward revision in this number? I know everyone's looking for one, but what do you think realistically?
Well, it depends, really. I mean, some people who would be arguing for QE would hope for an even lower figure, but they will obviously put their focus on the April and May figures, just like those who are arguing against QE would put their focus on the April and May figures. It's all about the Easter effect. How big was it? Inflation declined from 0.7 to 0.5 in March. In the UK, the decline, which was also impacted by Easter, was a slightly smaller one. So maybe underlying inflation in the Eurozone has still declined, which would make QE more likely come May or come June.